Today's video is a deep dive on Zephyr protocol, the untraceable and over-collateralized stablecoin protocol. Guys, we're going to be doing a deep dive into this project, figuring out some of the fundamentals such as the tokenomics, the team, the partnerships, overall value proposition, and much more. Ultimately, we're trying to figure out whether this project should make it to our overall portfolio for the up-and-coming bull run. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Now, the question is Zephyr an opportunity? Guys, we're going to be doing a deep dive into this in this video, looking at the overall value proposition here that Zephyr has to offer. And we're going to be using the website as our main platform to figure out whether this project has what it takes to make it to our portfolio. Of course, you know, the bull run is around the corner. The halving is around the corner, and we are all looking to prepare our portfolios and set them up for that bull run. Guys, Zephyr could be one of those projects. So let's get right into it. All right, let's kind of scroll through the website first. We'll look at some links. We'll look at some, some overall graphics, what they got going on here, how they present the overall information. So there's a lot of details here with regards to some of the details. Basically, Zephyr protocol. What is it? What is it about? What I like the best about this introduction is that it gives a bit about the history and the mindset and overall. What's very important to take away here is that Zephyr is pretty much a combination of two narratives and two types of projects, right? DJED or JED is originated, basically it's a stable coin from the ADA system, from the ADA ecosystem. So stable coin. And then basically it also leverages the technology behind Monero. So if you're talking about stablecoin, you're talking about Monero, which is obviously a privacy project. What ZEP really does is integrates both types of narratives into one. Both types of technologies obviously taken it to the next level, putting their own proprietary spin to it, but ultimately ZEP is a stablecoin geared towards privacy. Guys, we know that in the crypto space at the current moment, we do have a bit of room, actually quite a bit of room for this narrative to flourish. You know, we do need stablecoins, we do need a bit of privacy hanging around there, but ultimately there's things to be said behind those two narratives. The stablecoin narrative, of course, being something that is a necessity for the entire crypto space as an ecosystem. And of course, we look for decentralization to the maximum. And Zephyr is one of those projects that is completely trying to decentralize our stablecoin, which is obviously a value proposition on its own behalf. Obviously, it's something that we want, decentralization, because our current state of stablecoins are pegged to the US dollar and backed by the US dollar for the most part. So this is something that we need to consider, is that ZEP's initiative is to decentralize stablecoins. Now, we've seen this before. We've seen this idea. We've seen algorithmic stablecoins in the past. We've seen them do well, some of them. We've seen some of them collapse. Of course, we know what we're talking about here when we talk about the stablecoin collapse of Terra Luna, but obviously, those are just growing pains that, all new speculative industries kind of go through, right? Until we actually find our footing and find a technology that works, and we learn off of our failures as an ecosystem, as an entire new speculative asset class. This is what we're looking for, is learning off of the scenarios that we face, the trials and tribulations. So the reality is Zephyr is in the right mindset. Right, so value proposition, decent. Let's look at this in a bit more detail. Let's keep on scrolling. Let's see if I can zoom out here just a little bit, because I feel like the website's really magnified, and if we can kind of add more real estate, that would be great. Zephyr protocol, there's a lot of reading here for a front page or landing page. Obviously, a lot of this jargon can be put on a white paper, and in my opinion, a website should have a lot more graphical representation of information rather than a lot of reading like this. So it is is over collateralized. This is something that we really have to understand is that up until now we've seen stable coins always talk about collateralization and its liquidity. At the end of the day, are we able to get out of our stable coins at any given point, right? And what are they pegged to? Is it the asset class that it's pegged to? Is it stable enough to ensure that we can go and essentially get our capital back if we wanted to get our stable coins back into fiat or back into maybe even to Bitcoin or whatever it is, right? At the end of the day, we want it to be liquid. And when an asset like a US stable coin is over collateralized, what it really means is that there's more assets in reserve that are collateralizing that stable coin, which means that it almost ensures to a degree of certainty, obviously if it's over collateralized, that you can find liquidity there when you need your stable coin, right? But at the end of the day, the mechanism mitigates the risk of bank runs, exactly, where a large number of users simultaneously withdraw their funds, and of course not having those funds readily available means that there's not enough collateral. However, they are over collateralized by percentages, and we'll talk about all those percentages, their targets, and the way the algorithm kind of works in sense to kind of keep this thing balanced. And it's not really not necessarily an algorithmic stablecoin, because you're not relying on an algorithm to maintain the peg. In fact, what you're really relying on is the over collateralization, which is one of the issues. If you don't have the collateral, how are you going to be liquid? So this is a good thing. At least they're thinking forward. How the best way to defend the peg is essentially to have a ton of capital or collateral just in case it needs to be deployed or something like that. So this is really, really interesting. It inherits the Monero code base, and at the same time, basically being a privacy coin, it gives us the privacy that we need, right? But you have to understand that there's limitations there, right? We've seen what happened to Monero in the last little while. Monero got a little bit of fear in the market, given the fact that ultimately, as a coin that could potentially be a threat, let's put it that way. If you're doing a SWOT analysis and you're looking at what kind of threats could a privacy coin have, and ultimately it's all about regulation. It's all about regulations, because regulation essentially doesn't really like us having a privacy. So we've seen a lot of major exchanges such as Binance and others delist Monero because of this scenario. So there is a bit of a threat here for ZEP to get that mass adoption going, but ZEP totally addresses this concern in its documentation. Okay, let's continue here. We'll stumble upon a lot of this information as we go. And again, battle tested the JED protocol, which is part of the ADA ecosystem. It's a stable coin, and they use their stable coin mechanism or their infrastructure and how it was built and so on because it was basically tried and tested and and so on. So they kind of trust its mechanism, it trusts its engineering, and in that case, they decided to use it, and they decided to use Monero. So it's a combination of these two projects, Monero and JED, which is pretty cool. So they have their own wallets. You get a Windows wallet, and they have a Mac, Linux, and so on, Intel, I don't know, definitely different wallets ready to be downloaded. And you can actually mine this, because ultimately it is a proof of work coin, so it's mineable and all that. We got some exchanges: 7C, Trade.org, MEXC, Non-KYC. And one thing you have to address here, one thing that we really have to understand, is that the listings are going to be very selective here, and they have to be based on their strategy and their positioning in the market. The reality is, again, the threat that it has is the fact that it is a privacy coin, okay? And it and based on the fact that exchanges are not really keen on hosting privacy coins as trading pairs, the reality is they're going to have to get into exchanges that are a little bit in that gray zone. So right front and center, we have non-KYC. You can imagine that they are a little bit more flexible and interested in supporting such projects. So for me, and obviously MEXC is there, and the rest of them, these are smaller exchanges trying to get out of basically lift up and compete. And the only way they're going to really compete is by being very open to the idea of different narratives, even though they fall into the gray area. So this is something that ZEP, again, does address, and we're going to talk about their statement in a second. Zephyr, that's the website, guys. It's pretty straightforward, very basic, not much information right on the landing page. I think there's a little bit too much text here, personally speaking, but again, I think they are looking to update this website very, very soon. So let's continue here. Let's click this network tab. We'll get that going. This is blocked for some reason. Let's see if I can get that going. Just understand that a lot of these Web3 websites basically do get blocked by any antivirus that you may have. So understand that you're gonna have to put some exceptions or do something to try to get through to them. Just make sure you know what you're clicking and you trust the websites that you're visiting. So this is the network page. Let's leave this for let this be for a second, because I think there's a lot to be said with this, and I think that we need to kind of dig deep into other avenues before we start looking at numbers. I like to leave the numbers with the tokenomics and start looking at the tokenomics in a separate wing of this review, because ultimately that for me it's about categorizing the information that is important at the same time. So let's jump right into the white papers. Maybe not. Let's take a look at this website right here. So one of the limitations that I see on the website itself, again the Zephyr protocol, is that there's not a lot of info on the landing page. And if you go to the network, fine, you go to the wallets, there's nothing really there. The Explorer, we can open that. Hopefully that's not blocked. It is. Okay, we'll fix that as well. We'll try to get in there, but there's nothing really happening in the Explorer either, to be honest. So that's another thing. The mining pool, white papers, I have that open, ready to go, and the frequently asked questions is probably a useful one. So we'll get that open up in a new tab. Okay, so we got a couple websites to a couple pages to go through, but you'll notice that the Zephyr team does rely significantly on Medium to release updates. And for me, it's like, might as well just update your website and keep it current. Design it in such a way that it can be updated very quickly. And that's a part of the communication with the overall environment is the website, not these Medium blog posts. So regardless, this is what we have. This one is a little older, 2023 in July, so last summer type of thing, but we get a bit of information that I think we need to address. So we'll jump right into what this has to offer. We can see that it's an emission schedule. Basically, if we scroll down, you'll see that the emissions over time is a 20-year emission. So essentially, the amount of tokens that get entered in circulation come out very slowly over time, and eventually flatline just a little bit. One thing that we have to understand is that Medium has an unlimited or a max supply. Now, it's not necessarily a max in the sense that it's going to keep on going forever. They call it the tail end of the emission. So the pre-tail, and then you have the tail. So this is the tail. After this yellow line right here is the tail. The tail emission starts at this level, which minimizes the amount of emissions significantly. Over time, you're going to see that the amount of emissions actually comes to such a small amount that it's almost pretty much maxed out. Very similar to the way Bitcoin works. Okay, so this is something that you got to understand. So really, the emission schedule is like this, and eventually you get all the tokens into circulation, and we are very, very early here. We don't have many tokens. I think we'll look at the tokenomics in a second, some of those metrics, but generally speaking, we're very early. We're right around this level. Okay, so there's not a lot of tokens in emissions just yet or out there yet. But so what you really have to understand that this means that the supply is technically unlimited and can exceed 100% over time. And this is because the rewards, eventually you need to have there's no more block rewards, so you need to reward somehow in order to get this thing. It's a proof of work. There has to be some sort of reward. So when the block rewards basically drops below 0.6 in the calculation, 0.6 is basically used as the block reward. So it kind of flatlines after a while. And then you got the emissions that is the pre-tail, so the tail end of the emissions that flatlines completely. You can see that based on the chart. So for me, that was pretty interesting. A lot of the individuals, when they look at the tokenomics and they see the max, that's pretty much a negative, right? It is a total supply, and that's all it is, a total supply, but it doesn't end here. After the tail, there's more, but it looks kind of negative when you see that. But you have to understand what's the purpose here, and ultimately, there has to be some sort of way of rewarding individuals. Now, this whole ecosystem comes in three parts. There's actually 3 tokens or 3 coins that are part of this ecosystem. You have the ZEPH, which is the base currency, and then you have the stable coin, which is ZEPH USD. Okay, so that's something else that you got to consider. That we also have a reserve reserve currency, which is ZEPH RSV. Okay, so the tickers are slightly different. We'll take a look at those tickers in a second, but really this whole project revolves around the privacy of stablecoin, the privacy stablecoin, and the rest of these tokens are pretty much used to either reward, balance out the reserves, and in case you hear, we have the reserve currency, and almost gamify this balance between reserve and stablecoin issuance. And this is how you can maintain a nice level of a peg, pretty much. Okay, so that's a pretty interesting thing. Obviously, guys, do your research, do a little bit more. You can see that there's the emission schedule right here, and it does compare to Monero and Bitcoin, and see a slight difference in the curve itself, and how steep it is. And it just means that the way the tokens are basically distributed are a little bit more front loaded, so that's fine. Block rewards, something a little bit more interesting, is the overall breakdown of where these tokens are going to be issued and how are they going to be distributed. So you can see that there was a bit of an update at one point prior to V1. This was 95% was mining rewards and governance was 5. Then they updated it, which means that ultimately there's a bit of a change in the way the distribution is happening. So we have a mining rewards, which is now 75. Okay, so the miners are going to get 75% of the block rewards because it is a proof of work coin. Okay, and then you have the reserve reward, which basically is saying 20% of the block reward is allocated towards bolstering the ZEPH reserve as an additional incentive mechanism for providers, basically to over collateralize. It's an incentive for individuals to buy the reserve token, and then they're going to get rewarded. This token right here that I was mentioning before, this is a reserve token. So if you are a holder, you are going to get rewarded. And basically, if you're a holder, you're basically putting that value into reserve to hold the peg, just to keep it in reserve, because it's over collateralized. So if you're going to provide collateral, you're going to get rewarded for it. So that's good. It's a way of keeping this thing afloat and balanced off. Now you have the governance reward. The governance reward is a 5%. Basically, that goes to the team. It goes to the team. It's reward. It's not very clear that it says that, but I went on the Discord, asked a couple of questions, and basically, a long story short, the 5% is used for the block rewards, is allocated to the funding and ongoing development of the Zephyr protocol. In summary, it goes to the team's wallet. Zephyr has no VC funding with no ICO, so no venture capitalist funding with no initial coin offering. So essentially, it's pretty much a fair launch, which is really, really good. Okay, we do have a a vesting schedule that we can see here that are going to be tokens are going to be released in emissions, and it seems to be a fair distribution anyway. So this is looking okay. So far, so good with regards to tokenomics. And like I mentioned, the governance rewards has to do with the team, getting some rewards for their effort. Now, speaking of the team, now that we have that on topic, guys, the team is completely anonymous, and they make that very, very clear. Right, it's very clear that they're anonymous on the Discord. If you look at some of their frequently asked questions, they talk about the team, and it's completely anonymous. Which, guys, we look for fully doxed teams, but we got to understand that maybe their strategy here of coupled with the fact that they are fair launched, they are pretty much trying to protect themselves. And I understand that, especially when you're talking about a stable coin. Remember what happened Terra Luna, when things hit the fan, when things go down or whatever happens, a lot of the times your privacy kicks in. So I understand that they are not only providing the general market some privacy tokens, obviously your privacy USDT, but they value their own privacy as well. So it's within narrative, I get it, but as a project, we definitely value transparency and who's behind this project. And unfortunately, the team is not doxed. So we got to move on from there. Funding and sustainability. So Zephyr has a robust treasury fund. This is something that I want addressed later on when we talk about their security measures. If the stablecoin were to get depegged, I want to make a correlation to this statement. So let's make sure that we're clear about it. This is why Zephyr has a robust treasury fund. Is because they basically want to have some funds for operational cost and basically reserves for a strong reserve. So basically, it just serves for a strong reserve. Now, operational cost is a very vague thing. What exactly does that mean? Now, just understand that the treasury fund is fixed. It's 500,000 ZEP tokens, and that's it. They're not adding to this fund as far as it says here. It's not like it's going to be accumulating, and that 5% that I mentioned before is going to the wallets of the team. This is all what was said on the Discord, okay? Now, if we continue going on and we keep this in mind, we'll kind of reflect back to this statement in a second. But if we kind of look at what's happening here, the overall narrative of this project does have a bit of a threat. And of course, it does use prior technology that has been, tried and tested, like the JED protocol, and we're talking about Monero. And it does, have a bit of a partnership here, joining the JED Alliance, which is great, but there's nothing really more than that with regards to partnerships. I don't even feel like there's a need. They're providing a utility. Their use case is a utility, which is stablecoin, and adding a layer of privacy to it. So the reality, what kind of partnerships are really necessary here? And I get it. So that's something that we got to consider. Now, there's a lot of exchange listings and market expansions in the future that they are aware of, that they need to kind of like get on board with. CoinX, they're already on non-KYC development milestones. So this starts to get into a bit of a roadmap style of a discussion. However, it's not on their website. Usually we are prepared to look at these milestones and all of this on a website with some good graphics and a visual. And obviously, if we start looking at the timing, when was this released? We're talking about December 26th. So it's not that bad. It's not too far away. We're doing pretty good here, but you can see that there's a little bit, milestones. This is a very vague type of roadmap. There's not really anything mainnet launch. I know they have a V2 of their Oracle coming around, and they're trying to get that going. I know that they're trying to get a wallet, more wallet and mobile support. So like, it would be nice to have all of this information on a website that's nice and clear. That's my take. Looking ahead, again, decentralized Oracle. This is what I'm saying. What's really interesting about the project, in fact, is that they have their own Oracle, their own pricing Oracle. You have to understand that in order to keep this pegged, they need data. They need data from the marketplace. So the reality is an Oracle is required, and obviously they have their own proprietary Oracle. It seems to be like they don't use Chainlink or anything else. They use their own Oracle, their own chain. They got their own chain and their own Oracle, and they their own stablecoin. So they're a well-established ecosystem, which is really, really promising. And when you start looking at all the moving parts that they have and how they basically the whole ecosystem supports itself and has no dependencies, really, this is a really strong idea. This is really strong. It's really good. Okay, so let's move on. There's a lot to be read here about the future implementations, the future things, but again, it's a bit vague. And I also feel like they've really hit a lot of their milestones already. Like, really, a new website, okay. Supporting development for mobile wallet, okay. Continue your research, of course. Like, these are all things that are natural, that are pretty much expected. I think this project is already somewhat matured here. They got a lot going. They have use case, they have utility. The product is actually working. So this is not bad of a scenario to be in. But I know it's difficult to provide those details on a roadmap. Okay, let's move on. There's another one here. Again, a lot of information here on the Medium leads me to believe that website needs an update, especially that this is not really available on there. And here, if you want to learn a little bit about why Monero and DJED, I would definitely go read a little bit about this. Again, it's a bit repetitive. Let's see. So a lot of people might try to make a correlation to Terra Luna, and the reality is Terra Luna is slightly different, although it has its similarities because it's a stable coin and it's algorithmically based, let's say. But the way it pegs, the way it's collateralized, it has nothing to do with algorithmic stabilization. So Zephyr protocol ensures that no additional ZEP, the base coin, is spontaneously created because of the backing of ZEP USD. It is already over collateralized by ZEP. So at the end of the day, no more ZEP is going to be issued to kind of maintain that peg. And that means that if no more is going to be issued to maintain the peg, you're not basically diluting the value of ZEP ultimately just to maintain the peg. And that's a good thing. What they're really relying on is the collateral that they have. So they're being super responsible with the collateral that they need, and being overshooting and over collateralizing in order to provide that stability and that security. That it potentially could be the answer to the solution of having a decentralized stablecoin. So again, nothing is secure, nothing is 100% secure here, but at the end of the day, it's a great implementation, and I think it's a great idea ultimately. If we keep on going down, there's a lot of just general questions that if you're interested, definitely do your research here and read. But I'm going to go to the ones that I think. What happens if the reserve ratio falls below 100%? So before we talk about that, let me just quickly scroll. Before we talk about, there's another one. Yes, I want to talk about that in a second. But before we talk about this, we need to understand how they basically orchestrate the ratio, which is a ratio of reserve. How much reserve do they need in order, basically collateral, do they need in order to maintain a safe zone, right? So we're going to talk about that in a second, but we also have to understand that there's three numbers here, okay? And we're going to talk about that in a second. But before we do that, I just want to talk about this concept because it's right here and I don't want to go back to this page. The reality is that they are doing a great job addressing the concern. It's basically the elephant in the room. Zephyr protocol is designed to be a decentralized and anonymous project, which we know anonymous doesn't do very well. Look what happened to Monero. I'm going to repeat that again because it's very important to understand that if you're doing a SWOT analysis, there is here a threat, an external threat to this narrative. Of course, it's regulation, and ultimately regulation puts pressure on a lot of these exchanges not to have these types of anonymous or privacy projects listed, which could give Zephyr a hard time, which makes it less susceptible to regulations. This is important. The team is focused on trading on trading on privacy friendly exchanges, which we've already seen. No KYC and MEXC is pretty good, and listing under a broad spectrum of jurisdictions. That's a very vague statement, but what it's trying to say is be open and friendly to other opportunities other than mainstream or main heavyweight exchanges. That's the only way they can get this thing going, because big exchanges are trying to be compliant. Integrations with decentralized exchanges, that's a great strategy, is another method that the team is using to basically address this potential concern. And it is a regulatory concern. Like we said, privacy is something that is another layer of risk. We already have a layer of risk with crypto in general, but now when you're going to be adding this privacy level onto it, it adds another layer of concern. Okay, so I'm just wanted to bring that out there, guys. Understand the risks, understand what you're getting into. Although I like what it's trying to achieve, this is a concern. Obviously, we have to address all concerns. Okay, so back to what I was saying here. I know I'm jumping around here just a little bit, but I'm trying to use their documentation as much as I can to navigate this project. And that's one of the ways that I assess the overall delivery of the information here. So far, ZEP's delivery of information is quite poor. Their website needs to have all of this in a very nice, well packaged. I think they're frequently asked questions. There's too many, and a lot of them are not really even that necessary. So nonetheless, let's move on. Okay, so we got that. Let's jump to the white papers. The white paper is well established, of course, lots of information, a lot of case study. In fact, I would say a good 50% of this white paper, if you even want to consider it a white paper, because usually white papers have a bit more technicals, but it's pretty good. I'm going to retract that statement. It's good. It's decent. It's good. What we're going to really do is focus on the important stuff. Now, this statement right here is important. Let's see if I can zoom in just a little bit so we can see this a bit better. You can see that there's some specific numbers that need to be addressed. Where did it go? I see the 800% and the 400%. So what we have to understand is there's a range. Really, what they really want to do is ensure that the ratio of collateralization stays above 400%. 400% collateral at all time. Okay, so what happens if it comes below? And then they also want a maximum ratio to equal 800%. So there's this range. They want the reserve ratio to be between 400% and 800%. Now you're gonna have to keep this in mind. We're gonna go back to that Explorer, to that network protocol page that they got to show you these ratios and the way they fluctuate. But I want you to keep this in mind. If the protocol maintains a maximum reserve ratio of 800, that's their objective, okay? What they really want to do is if it goes above and it meets that level, they want to make sure that the reserve coins get halted. So new issuancy, so assuring that the minting of new reserve coins basically is halted. That's what they want to do. They just want to stop it. If it reaches above 800, they don't want to over dilute the reserve coin for the holders. The holders that are already holding that coin, if they start issuing more above 800%, it starts to get diluted, which is not obviously in their favor. So they want to keep it within a threshold of 800%. Guys, that's still a massive over collateralized asset right there. Okay, so that's a lot. That's pretty good. The reserve is also it's backed by the stable coin, but it is insured to be above 400%. The stable coin is backed. It has its collateral. We get that, but it shouldn't, let's put it that way, it shouldn't drop below 400%. And if it does drop to that level, they got a contingency. So in that case, what they will do is halt. Basically, no new stable coins are able to be minted. So in this case, no stable coins are going to be able to be minted, which basically gives them the ability to basically make the reserve coin come down in value. So if you can't mint the USD, the ZEPH USD, all of a sudden the price of the reserve coin comes down, giving the users incentive now to buy the reserve token or the reserve coin. So if you're going to be buying the reserve coin in this case and it's undervalued, you're probably buying low, and then when it reaches its equilibrium or gets back into its range, it probably went up. And if it reaches 800 all of a sudden again, you can imagine that your reserve coin is going to be valued very high, and of course they're going to want to get a little bit more stables minted again. So it's a balancing act between stables, USD, in this case ZEPH USD, and the reserve coin ZEPH RSV, and that balance and that orchestration keeps the peg going. So that's a really good thing. Now what happens if this project actually falls below 100? Now if we go 100%, and we got to keep these in mind, and I'll repeat them later, not this, I don't want to look at that just yet. We're going to take a look at price action just in a section, guys. This deep dive in fact was probably my most intense one because of all the numbers and all the little additional things that make this mechanism work. So another frequently asked questions page here on the website, and I think there's a lot of repetition to that medium version that it has. Yeah, I think there is regulatory concerns. What happens if we get into a position or a scenario below 100%? This is the concern. So you feel free to read this in a little bit more detail, but you can see that they have a contingency for that as well. So if that happens, basically they're pretty much ensuring that each ZEPH USD will be able to be liquid. You will be able to withdraw and all of that. So your stable coin is ready to go and you don't have to worry, right? Because of the over collateralization. But in addition to that, if it falls, the fees that get incurred, basically that get accumulated, the accumulated fees can be used to help maintain the network, but they also have a treasury fund. So this is where I want you guys to kind of like make that connection. The treasury fund of that 500,000 ZEPH that we've identified earlier on this other page, I think it was right here, okay, that uses this 500,000 ZEPH for a robust treasury fund, which covers operational costs, also is used as an emergency fund for, let's see again if we can go back to that page successfully. I know I got a lot of tabs going. We're going to bounce around a little bit right here, which is basically used to also maintain or come in as a basically to come keep its balance. The reserve is designed to bolster the protocol during adverse market conditions and provide liquidity when required. So all of a sudden it loses its peg, it falls, it's falling, or the reserve is falling, the ratio is falling under 100%, and then you have this treasury fund to come and back it up. However, guys, it's also, this treasury fund is also being used for operational. So the thing is that at what point do we know how much ZEP is left? And if this ZEP amount is going to be enough to hold the network stable when it reaches under 100%. So there's not a lot of security here under this in this red zone. Let's call it a red zone. When it falls under 100%, it's almost in a sense of disparity. But I think what they really are trying to do here is maintain that 400%. As long as it stays above 400, it's good. So you can see this is a little bit of numbers. There's a little bit of a mechanism here, guys. I know it's a lot to understand, but again, I encourage all of you guys to do the research. This deep dive took me a couple of days to actually really understand what's going on here. And of course, videos here just to get you going. You know, you take responsibility on yourself and understand what they're trying to achieve here. And obviously, the long-term goal of ZEP is to be a competitor to USDT and BUSD, right? That's what they want to be included in that whole scenario, because we know that USDT and BUSD are not decentralized, and they want to be the first basically trusted stable coin that is decentralized and private, right? So that's a good thing. So keep that in mind. Now let's continue. Now let's go back to this page right here, guys. I got pages open right now, lots of them. Let's see, this one right here is the protocol. Yeah, right here. So this is the current reserve ratio. So it's at 1,500. So in this current state, right, no minting of new reserve coins are happening right now. They're basically halted, right? So this is the state it is. Now, if it falls below the 800, then you can start minting reserve coins, right? And right now, this is pretty much in a state where you can still get stables, but not reserve coins, right? So they're trying to give that incentive to understand, look, we're way over collateralized at the moment. Very, very secure. They got a lot in reserve. Now, I think in the reserve right now, they have 900K right here, right? Which is a lot, 900K ZEP tokens. And right now, ZEP tokens are pretty much being traded at 1730. So that's quite a bit. It's quite a bit of capital here that's used as collateralization, given the fact that their stable coins right now is, right here, ZEP stable dollars in circulation. So they pretty much could cover, they are over collateralized by a significant amount. So that's really healthy, really, really healthy. So let's move on. I think now we understand that when this percentage falls between a certain threshold, that the market, or the way the mechanism is that it gives incentives for individuals to buy reserve tokens and back and forth. Okay, so that's pretty cool. I appreciate that. I like its mechanism. I like its objective, and so on. Let's continue. Now, I didn't talk about the team. We talked about a lot of these other Medium pages. To be honest, I'm going to go back to this concept of the website, and I'm glad that they realized that the website needs a bit of an update, because there's not a lot happening here, and it requires too much bouncing around in websites that don't really belong to their domain, which bothers me a little bit. All right, guys, let's continue. Let's take a look at some of the metrics. $17.30 right now. That's what it's trading at, the Zephyr price. Now, there's a bit of a discrepancy here on CoinGecko and CoinMarketCap, so you got to always be critical about them. But it seems to me that CoinGecko right now has the more accurate metrics right now. So market cap is at about 53 million. So it's still very small here, guys. We're talking about small market cap. Fully diluted is 53 million, because ultimately the total supply is at maxed out in its current state, in the sense that the max supply is unlimited, right? So the total supplies in circulating supplies currently, they're equal. So as we proof of work, as more tokens get issued, you're going to see that the market cap will go up, and it's based on that vesting period that we talked about already. Okay, so that's something to understand, is that over time we will see more tokens get into distribution, and hopefully there's enough bullishness here that they will get all bought up real quick. But really, yeah, the supply and the whole max supply, just understand the max supply is definitely tapers off to almost a halt, just enough to have enough rewards for miners. That's all it really is. Okay, so let's move on. What else do we have here? Where we listed, so a lot of the exchanges are very small exchanges with a low volume, the biggest one being Mexi, which right now is probably a mid-tier. It's slowly growing. You got to admit, Mexi's been doing really well lately. and so it does have carry a lot of volume in the last little while. CoinX is small, and these other ones are very small. So the challenge is there. Again, the challenge is there because it is a privacy project. The challenge is getting listed on major exchanges is going to be difficult, like Coinbase and Binance and so on. Given the fact that Binance delisted Monero already, what are the chances that ZEPH is going to find its footing into Binance? Probably none. Probably not happening. All right, so let's kind of move on from there. So pretty good stuff here with regards to token metrics and so on. Let's take a look at the infographic. Guys, I produced these for you guys just as a quick summary. If you want to read the summary overview, of course, it's there. Let's look at some of these ideas that I got going on here. So the ecosystem, as its internal state, is well established. They got 3 tokens, but it's all internal, no external ecosystem really. They got ZEP, the ZSD, which is the stable, the ZRS, which is the reserve, and then they have pretty much an entire package of ecosystem that's even governed by their own oracle, which is around the corner going to be updated. It's part of the roadmap, so that's a good thing. The utility is really good. Transaction fees for the token, and again, there's 3, but we're not talking about all of them. We're just going to talk about ZEP here because we know that the stablecoin itself has utility, and so does the reserve. But still, we'll talk about ZEP because that's what the project is about. Transaction fees used to buy stablecoin. That's what you can use to buy your stablecoin and collateralize the stablecoin and get rewarded for collateralizing as the ZRS tokens. So they're almost all like intertwined, and of course that's how the reserves are maintained in ZEP, ZRS, and ZSD tokens. So the utility behind the entire ecosystem is really healthy. That's one thing that we gotta look at, maybe not as an individual token, but as an entire ecosystem. The utility of it is really good. Roadmap honestly is okay, but it's very disjointed and all over the place, in the sense that I got to dig around to Medium blog posts and reading paragraphs instead of giving me a nice visual, a nice roadmap like a lot of other projects do to give us exactly what they are trying to achieve, maybe a bit of a time frame as well. So that's good, but they do mention that they want to get more exchange listings and potential partnerships. I feel like partnerships are going to be more difficult, but how else, what kind of partnerships do they really need in this case? They're a stablecoin and they're a privacy stablecoin. I don't know what kind of partnerships, but nonetheless, exchange listings is probably their biggest challenge at the current state. So that's something to consider. New websites and tools, this is what they have on the roadmap, and mobile wallet. Yes, we need those mobile wallets. A lot of us rely on our mobile devices to interact with Web3, and that is a necessity. So that's good, but again, it needs a formal roadmap somewhere. And for me, if that's not existent, 6 out of 10. The team is completely anonymous, not doxed. We don't know who they are, and they're clear about that, and they're honest about it. So that's good, but still, you can't give them anything because you don't know who they are. They could be anybody. And there is rumor that the team, in fact, is a great heavyweight team. Like they know what they're doing, but I can't confirm that, and we shouldn't rely on rumor at the end of the day. Social. Unfortunate. I'm very unfortunate with the socials. They're X followers. It's only 20,000 followers, but that's not the biggest problem. The problem is that their following over time is decreasing significantly. In the last 30 days, they fell 53%. Which is a lot given the fact that we're leading into a state of a potential bull run with the halving around the corner. I think that they would want individuals to start, trying their stablecoin and getting into this idea with stables, right? Especially when we get to the top of the market, where people are going to start looking for stablecoins and potentially privacy stablecoins that keep their gains private. So this is the opportunity to make this value proposition very clear to the mainstream society for mass adoption, and to see that their followers are coming down is not the greatest. And if you look at the amount of posts, 8 posts for the last 30 days, and they're up. So what does that mean the previous month? That means that you're probably doing very little, and that means that they're not engaging enough on socials. Now, the team itself is not doxed. Does that mean that they are not going to, have a public presence even as an alias? Guys, that needs to happen. happened. Now, I did go on the Discord and ask many questions, and there were a lot of individuals prepared to ask to respond and to help me out, which was great. So I'll give credit there. But as far as X, we know how important X is nowadays to create awareness. They need to have a bit more there. Okay, so let's move on. Tokenomics, 10 out of 10. I like it. 75% goes towards miners, which is good. And then the 20-year emission schedule, guys, 20 years. So if you're worried about dilution, it's going to take some time to get all these tokens in circulation. Just be prepared for this bull run. Just understand what's happening now. Yes, we're going to have token dilution over time, but the reality is it's going to take a long time. And ZEP is, new pretty much. So that's something to consider. So far, so good. It's at its infancy state. We got to understand there's going to be a little bit of, there's growth along the ways like that, right? It's not in a mature state whatsoever. So partnerships, 5 out of 10. I gave it because it's like, okay, JED, Alliance, stablecoin, and they kind of, they're part of their alliance, and they can get some good, let's say, pointers or maybe affiliation there somehow. And that's not good. Always good to have an alliance with a group that has experience within the field that you're in. So it's not bad. I would have liked a little bit more. What other partnerships though? That's the thing. So I was like, you can't hold them back really. So about 5 out of 10 is good enough. 50-50, not bad. Okay, fine. Exchanges, guys, we understand this is going to be their biggest hurdle is to get on exchanges. And so far, I can only say that they only have very small exchanges right now. Mexi is probably the biggest, and it's not even the biggest one out there. So the reality is there's a lot of challenge here. So I'm going to have to give it 3 out of 10 here because of the challenge. And and let's see how the future growth here. So the current price is 17.45 when I did the deep dive, and obviously it's fluctuating around that zone in the current moment. Market cap and all of this, and the supply, the current supply has to be, the max supply is unlimited, but it is capped after the tail or before the tail at about 18 million units, right? So 18 million units, 18 million ZEP. After that, you get into that slow trickle of basically issuance where, they're just meant for rewards. So it's not like it's completely unlimited, which it is, but it's going to come down so much that it's like it's negligible type of thing. Okay, so your trade volume is quite low. I would like it to be about 10% more or less. It's about 4% right now. Still okay, but I would like it a little bit higher. And that's about it here with regards to the market cap is still very small. So my overall verdict, there's some additional points here that I would like to address. Main value proposition hinges on a stable coin, somewhat algorithmic. Okay, obviously the collateralization aspect of it is not. It's definitely collateralized, so we're not relying on an algorithm to maintain the peg or to maintain its liquidity. You know what I mean? At the end of the day, it's way over collateralized. Up to right now, it's over 1,000% collateralized, which is on the over collateralized to an extreme. Complete decentralized stablecoin algorithmic UST. So at the end of the day, this is what their value proposition is to completely decentralize the stablecoin narrative. Guys, a lot of projects have been trying to do that. Some failed, some are succeeding, but the way they're setting themselves up with that privacy aspect might be something that a lot of people are looking forward to, especially at the top of the market. Okay, when they've made some gains and they want to look for ways of keeping their stability, or basically getting essentially de-risking and looking for privacy at the same time. Guys, that's something that I would be interested in. Never mind. Zephyr has no VC funding and launch with no ICO, so pretty much fair launch, more or less. The team is not doxed. We talked about that. Website needs more information, a little bit disjointed, needs a little bit more happening there. Graphics, roadmap and so on. So that definitely needs a bit of work, and it maintains its own pricing oracle, something that the website doesn't really bolster or really explain to the degree, because that's a cool idea given the fact that oracles nowadays have their own narrative. We've seen obviously Chainlink and Pith and so on, and this is something that ZEP has on their side, is that they have their own pricing oracle, which essentially gives them the price feed to maintain the peg, which is good stuff there. So it's almost like a very an ecosystem that it can rely on itself rather than external factors, which is really good. completely decentralized. The team is letting the final product speak for itself. That's their excuse for not being, or not their excuse, their motivation, let's say, for not being doxxed. They want the product to speak to itself. Not to say that they can't completely come out and be undoxed later, but just at the current moment, they want the product to speak for itself. Fine, I don't buy it, but it's fine. Establishing partnerships can be a challenge. Which partners would want to get into a partnership, or another organization to get into a partnership with a crypto project that is in a narrative that is being frowned upon by regulation and major exchanges? That's a tough order. That's a tough one. Like, at the end of the day, like, a lot of business individuals in this space don't want that heat. And the only way to prevent that is to not, get into the gray area. So I'm curious as to see how they can navigate those relationships. Now, as far as ZEPH goes for future value, where could ZEPH go? Honestly, given the fact that ZEPH offers such a great value proposition, and it's so necessity for the crypto space, I would love to say that this thing can fly to the moon. But again, it has its threats. Its challenges based on external threats are there very clearly. Now, if we compare it to Monero, which is not even fair because Monero is not a stable coin, it doesn't offer that stable coin narrative, but it does offer its privacy. But if we would compare it to Monero as a crypto that done very well based on its privacy narrative, yeah, ZEPH could do an easy 40x, easy reach about $700. And that's still just keeping in fact that, lately Monero took a little bit of a hit, and I'm using these numbers based on Monero coming down to slightly lower levels. So this is something to consider here. Now, I would be very, very critical if I were to get into long positions on ZEPH. I would be very defensive at any given time. If you're in some good profits, make sure you have your trailing stop losses ready to protect your capital and your gains and all of that. Just because you never know what happens with regulation. It could happen quickly, and you see how quickly Monero got delisted and how quickly it fell. So this is something that you got to understand, that there's risk associated. I give it a 7 out of 10 because in fact, I would love to give it more because the project itself is great, but it's the threats that it has behind its back that kind of bother me. So not bad, honestly, guys. ZEPH is pretty good. I would be considering holding a bit of a position just in case, especially after its retracements. Guys, let's take a look at the chart. Let's see what's going on here with ZEPH. I know you guys like talking about charts, so let's see if we can find a great entry. In fact, the entry has come and almost gone. We got a nice bounce around the zone that I called way earlier on this retracement. This was the area that I said, guys, start DCAing. Let's look at this in a little bit more detail. ZEPH came down through horizontal support right around this level. This is my first level of support. Came down, got a nice little bounce, and it was like, okay, pretty good. Now, we always have to be skeptical because it could be a dead cat bounce. And guess what? It was. So this is a scenario where it's like, what? Do I take a bit of profits here? Do I put myself at break even? At least a break even, so I ensure that I'm in a risk-free zone, basically a free trade to the upside. I'm at break even. If it does fall, it stops me out. No big deal. I reaccumulate at lower levels, or I get in upon a confirmation. And that would have been your best bet, right? Horizontal support. However, guys, if you think about it, if you bought in at this level, which is at about $17, $18, and you look at the current price, you're pretty much broke even anyway. You just have to endure, and you have to rely on your convictions, right? That's the reality. When you're in a retracement zone at the bottom and looking for horizontal support, you would like to believe that your convictions are the most important thing at that level, because there's a lot of fear in the market. There's a lot of red, there's a lot of FUD out there. But if you know what you're getting into, you understand the value proposition, you understand what the overall project's trying to achieve, it gives you a sense of security. It does. And in fact, it's a little bit of a strong sense of security, especially when you compare it to price action, because price action at the end of the day has a bit of manipulation. It has pump and dump schemes happening in the background, but fundamentals don't change like that unless they do. And this is very important. Right now, ZEPH, from a fundamental perspective, is quite clear. We know the limitations, we know the strengths, the weaknesses, opportunities, and threats that ZEPH has at the current moment, and there's no ambiguity from its fundamentals. price action wise, you can see that this thing is still making lower highs and lower lows. The trend is still to the downside. Now, if you start looking at momentum and you start looking at what the RSI has been doing upon this bounce to the upside here on the 4-hour, you know what, it looks like it's overbought. It looks like on the 4-hour come right back down. But if it does come right back down, that is the opportunity. Why? Because it's likely to give us a confirmation low. Let's go into the daily here for a second, because the daily will kind of compact some of this noise here for us to kind of look at this. So we did come down. We hit that next level horizontal support. There was a small little accumulation zone right around this level. It wasn't as big as this. The reason why it grew is because we hung around the zone for a little bit, and it kind of filled up the volume in the zone. We got a bit of a bounce off of this horizontal. So if you would have DCA'd here and down here, right now you would have been in a profitable state. Now the question is, is it gonna get rejected as it did get rejected right now at the golden pocket, and it starts coming down to lower levels, and is it gonna come down to the 886? This is my concern. If it comes down to the 886 retracement, that is another lower low after another lower high. The trend is your friend, and it's still not giving us confirmation from a price action perspective to start getting into this heavy. However, if we do come down and hold this horizontal level of support at about $13.40 and make a higher low, guys, that's a confirmation low. It's a higher low. It could be the beginning of some sort of inverse head and shoulders. It will be a slanted inverse head and shoulders, shoulder, head, shoulder, and we start looking for the break of a neckline. And that's a very bullish pattern. You know, ultimately coming down again, doing one of these and starting looking for this horizontal to start breaking. There's diagonal, to start breaking these levels. And you know, get what I mean? And then you start making higher highs and higher lows, and the trend is your friend, and you're in recovery mode all of a sudden, and you're looking for all-time highs in price discovery. So what we're really looking at is this a potential pivot point? Is this whole zone looking for a nice pivot point to the upside? Now, if you look at the daily in the current state is getting a bit of a dip. Let's look at the RSI for a second so that we can see the momentum. The momentum is getting a mean reversion play. It looks like the daily momentum ran up too quickly and too hard all of a sudden, and then the yellow and the purple want to get back together here. And as this happens, we might see the EMA, which is the yellow line, you know, creep up slowly while we see the purple come down, and they meet in the middle. And in the meantime, you'll see that the price might come down and start looking for support. And I would say if we get down to about $13, again, $13.40, it might be the best area to buy the dip. I think that this dip right here got a bit over exaggerated. You know, a little bit too much volatility to the downside, and then it recuperated and it got right back up here. And you can see that's what usually happens. Sometimes the market over exaggerates and wicks down and gets down to over a little bit too much, and then all of a sudden it gets this bounce. So this is looking pretty good. I think that we could expect a pattern here, a structure that suggests a pivot point. It's still a little bit early because we're making lower lows and lower highs. And if you look at it, there's no such thing at this current state of even bullish divergence. So there's no real actionable move here other than saying, you know what, I like the fundamentals. We've retraced significantly, so why not DCA and gain a bit of exposure just in case around this zone? You could put a stop loss right underneath $10 if you like, and hope for the best that we don't fall through this empty space right here, because you can see there's a bit of a volume gap. And if we can consolidate this, the next high is at about $5.85. Is it possible that we get there? So this is the issue. We don't have enough confirmations from a price action perspective. The MACD is looking really good still. EMA is facing up, green histogram bars to the upside. Really, really bullish on this behalf. But the RSI is getting its mean reversion. Let it come down and buy the dip. And that's where the 4-hour comes in. The 4-hour could definitely come down and get oversold. And if it does get oversold, that is the confirmation low bottom. So we come down, we see this price tag at about 13.25 or something like that, 13.30. And at that moment, we might see the oversold conditions on the RSI, but on the 4-hour, not the daily. The daily is still looking like it wants to get overbought. Let me get quickly on the daily so you can see what I mean. The daily still looks like it wants to get into the overbought condition, and the MACD is still showing us that the trend is strong to the upside. So the 4-hour is taking a bit of a breather. The 4-hour is getting that mean reversion play and potentially coming down to give us that confirmation low, that higher low, and then we start accumulating right in this range, closest as possible to the bottom. And that would give us a risk to reward ratio that is healthy. so that we can put a stop loss for invalidation right underneath these bottoms type of thing. You can see that there's a bit of weakness that kind of builds right around this area. So this is not a bad area to say, look, if we fall below this area, I might want to cut myself off and maybe reaccumulate at about $9. But again, it would be nice to see a bit of structure. So let me make this a bit thicker so that we can highlight the value and the importance of this horizontal right here. And we can also understand that if we start putting pressure on any diagonal trend lines based on this, somewhat of a channel, because we could do that as well. Show you what I mean. And I'll kind of tailor it, make it look a little bit better. Like, it's not the cleanest, but you get what I mean. Like, it's still making lower lows over time. So it's a bit of a trend to the downside. It's not a clear trend where we can put a diagonal with a clear breakpoint. So what I'm going to do is I'm just going to make this a spider line, so we're not totally confused, but just to keep us in check with the reality of a nice downward sloping channel-ish type of price action. And we could come down and get that confirmation of a pivot point right here, double bottom, W formations that happen here, inverse head and shoulders, cup and handles and so on, right around this area, giving us that confirmation. And as we come down to this level, I would be DCing. So again, DCing is your best strategy at this point. The bull run is potentially around the corner. Are we not going to buy into some of these bullish projects that we appreciate? And again, fundamentally, Zephyr is looking good. Price action isn't a retracement. You didn't buy any tops. You get a nice deep retracement, and that's usually where you get the most reward. Risk to reward is based on good retracement at horizontal support. Guys, if I've offered you any value in this deep dive, do the channel a massive favor. Slap the like button. It does help out with the algorithm. Of course, I'm going to be live tonight at 7:30 Eastern talking about crypto news and price action. If you have any projects you want me to cover, that is a great time and place to make those requests tonight at 7:30 Eastern. Take care, guys. Have a good one. And don't forget, buy the dip.